I have passed a lot of prop firm challenges. I've received numerous payouts, and I'm a fully funded trader with a lot of experience. In today's video, I'm going to be revealing to you exactly how I'm able to pass any prop firm challenges with ease. If you watch this all the way through and listen carefully to each point, you will go from struggling to pass a single prop firm challenge to knowing how to pass any prop firm challenge as you please and become a fully funded trader. Now, before we get into the steps, it's important to understand that every prop firm offers a wide variety of different types of challenges with their own set of requirements and rules. You will see standard challenges, royal challenges, rapid challenges with your choosing of a regular or swing account. Challenges are typically divided into two phases, and in most cases, for phase one, you will need 8 to 10% gain. In phase two, you will need a 5% gain. And they all carry a max loss percentage ranging somewhere from 8 to 12% and a daily max loss, which is usually 5 to 6%. I say all this so that you choose a prop firm and challenge type that aligns with your trading style for a better chance of success. Some traders fail because they choose a prop firm or an account that doesn't fit their style of trading. So do your own due diligence, review the different challenges and accounts to see what is best for you. Most prop firms have options so that you can compare different accounts and different prop firms. I personally use a standard or normal risk mode challenge with a reputable prop firm, and I stay away from any relatively new prop firms. Keep in mind, prop firms are gaining a lot of popularity and there is a battle for attention. And they do this by highly incentivizing traders to go with them. So don't get caught up in shiny objects like big refund percentages or high payout percentages, because you're still up against the house and they will make up for it in other areas. These prop firms are in the game of losing. That's where they make the bulk of their revenue, not from profit splits. So just keep that in mind. Let's get into the steps to efficiently pass challenges and get you funded. So the first and most obvious step: only take a challenge when you have a proven edge, a trade plan, and you are a profitable trader over a decent sample size of trades. So this doesn't mean 1 or 2 weeks of profitable trades and you're ready to take on a challenge. I'd recommend seeing at least 3 months of trades with a positive trade expectancy. And you can find your positive trade expectancy by taking your total P&L and divide it by all the trades you've executed. So for example, if you have a $20,000 profit after 50 trades, you would then have a positive trade expectancy of $400. And this will also benefit you as a trader on these challenges to know that you have an assigned positive result to all trades you execute, regardless if it's a winner or loser. So moving on to step 2. If you're profitable, the next and most important step is to get prepared. So this is where you want to do your research and figure out what prop firm and what type of account you're going to be going with. I'm not affiliated with this company, but you can't go wrong with a company like FTMO and their normal risk FTMO account type with 1 to 100 leverage. This is going to be good for most traders. But again, make sure your decision is based on your own research. After you have selected the prop firm and the account type, you want to familiarize yourself with all of the requirements and all of the rules. The framework is pretty universal, but every single prop firm will have slight variations. So simply just pull up the FAQ section on that prop firm's website and read over everything so nothing is a surprise when you're in the middle of an active challenge. As you're doing that, here are some things to look for. So what type of leverage is offered? What are the profit targets for that prop firm for phase 1 and phase 2? There usually are no profit targets once you're actually funded. You can do 1% if you want and then cash that out. Another thing you want to look at is what is the total max drawdown and the daily drawdown. The other one is minimum trading days. So some will have 3 minimum trading days, some will have 5, some will have 20, and some even higher than that. And then you want to see if that prop firm offers any soft warnings if a rule is broken. Some are strict, and if a rule is violated, violated, they will fail the challenge. And then you want to look at the time limit. So sometimes you will have a different amount of time that you have to complete the profit targets, and those are usually different based on phase 1 or phase 2. And on a funded account, there are no time limits. And then another important one too is if you can trade news, and if so, which events. And then if you're a swing trader or hold positions overnight, that is something that you want to look into. So a number of things that you want to look to see what is offered by that prop firm. Being prepared is everything. Moving on to step 3. Once you have the prop firm and the account selected and you're familiar with all the rules, the drawdown, and the profit targets, you want to sign up, you want to make an account, and then you want to open a demo challenge. Almost every prop firm will allow you a demo simulation of a real challenge, and I highly recommend doing this so that you can get comfortable using their platform and you can start practicing with the rules and the restrictions in place. Now, fourth, after you've run a few simulations and you are ready to go, the next step is to start a real challenge. And here is a pro tip for choosing the amount of capital that you want to go with. So you want to make sure that you have at least 4 bullets locked and loaded. And here is what I mean by that, and I'll also give you an example to drive the point home. So the average cost of a standard regular challenge for a $100,000 account is roughly $550 to $600. So if you only have $600 to invest into a challenge, you should select either a $10,000 account, which will usually run around $150, or at the absolute most, a $25,000 challenge, which costs right around $180 to $200. And the reason I say that is this: if you are going to hunt to feed your family, would you rather go with 1 bullet in the chamber or a full magazine? And this is no different. If you can come to a challenge with a full magazine locked and loaded, you will trade completely different versus if you put yourself in an all-in 1 bullet or bust situation. Challenges can be a high pressure and stressful environment, so put yourself in a better position to win. So if you're gonna go with a $100,000 funded account, make sure you have at least $2,400 locked and loaded in order to get that account. It might not take you all of it, and you might do it on the first one, but it's the mindset that comes with having that full magazine. And at the end of the day, every aspect of trading is a numbers game. So if you lose your first challenge, so what? You go back, you review, maybe the nerves got the best of you, maybe your edge just didn't materialize in that sample. You move on to bullet number 2. And let's say on bullet number 3, you pass the challenge. You acquire your $100,000 funded account with $1,800 invested. You would only need about 1.5–2% in order to recoup everything you invested. 2% would be a $2,000 gain on that 100K account. And if you're on FTMO and you get an 80% profit share, that would be $1,600 coming to you. Plus you will get your initial investment refunded, which would be another $600, totaling $2,200 and a $100,000 fresh account. Now, if you did 5%, you'd be looking at $4,600 coming to you with a net profit of $3,400 and a fresh $100,000 account. Another recommendation that I would make to you is once you're funded and you receive your first payout, reinvest some of those profits and take another challenge. Now, depending on your cash reserves, you can even do this before you start trading your first funded account. The concept is the same. So let's say you acquire a $100,000 funded account. You start a second 100K challenge and you acquire a second $100,000 funded account. Now, instead of merging these 2 accounts together and trading the 2 separate $100,000 accounts at the same time, only trade one of them and keep the other $100,000 account in the bank if something were to happen to the first account. Now, this is also going to change the way you approach your newly funded account and your mindset, especially if this is your first time trading substantial capital. Now, I would recommend you start lower than higher when you first take challenges if this is your first time ever trying to get funded. Many traders, once they get funded and it becomes the real deal where every decision now has a real monetary value assigned to it, they freeze up, hesitation sets in, or fear just cripples them. And having reserves will benefit you and your decision making. I just recently had a student who is a union electrician acquire a $200,000 funded account. This is the first time he's ever been funded, but before he started trading it, he acquired an additional $200,000 funded account. Now, when he started, he only traded one of his accounts, and he had 3 back-to-back profitable months, totaling almost $50,000 profit coming to him. He said, taking my recommendation, having reserves, prepared him and made him much more comfortable and allowed him to trade with a clear head. Now, the fifth and final step, management. So capital, risk, and trade management are essential when it comes to passing challenges. Now, there are a lot of ways that you can do this, but this is why you need to review your personal stats, what you do on average a month. So look to see on average how long it takes for you to do 10%, risking 1% or 2%. And then on average, how much drawdown do you see before that actually happens? The safest approach to challenges will always be risking 1% per trade, which inevitably will equate to more trades needed in order to pass. Not always, but if we're playing at the numbers here, it is going to happen more often than not. That is why it's a good idea to know the average length of time and number of trades it typically takes you to gain 10% at 1% so that you have an idea of the road ahead of you. Now, if you're a more aggressive trader who wants to hit targets in less trades by using 2% per position, you need to have a point where you put on the brakes. So for example, most prop firms will only allow 10% max drawdown. Now that's 5 trades you're going to be able to take at 2%. So how often do you do this based on your data? Now, if this is your approach, I would switch gears if you drop down to 6% and then reduce your risk to 1% and go into recovery mode. Be prepared and don't just wing it. Know when you're going to switch gears in drawdown and in profit. So let's say you're up 7% from risking 2% per trade and you only need 3% more to pass. The best strategic move here would be to reduce your risk and aim for a 1 to 3 at 1%. That means you'll be free rolling 7 trades in attempt to complete the target. But again, everyone has different aggression levels and there are countless variations that you can have here. The most important thing is that you have a capital management plan in play, and it will be slightly different for each profit target in phase 1 and phase 2. So as an aggressive trader, I usually start my challenges risking 2% on phase 1. And if I reach negative 4%, I switch gears to 1% risk and I go into recovery mode. Now in phase 2, where you have a 5% target, I always use 1%. The last aspect of management that you need to be prepared for is your active position. So again, there are countless ways that you can do this, but I will tell you what I personally do that I found to be very effective. All positions I execute, I need a minimum of a 1 to 5 risk to reward. And I only execute my position if my primary target falls within my Fibonacci extension levels. These are my profit taking levels. This means I'm trying to make money on my first impulsive continuation move from my entry. So a rule of thumb I have in place for my active positions, especially on a fresh new challenge, I'm only exiting my position one of 3 ways: a stop loss, a take profit, or a stop profit. I will rarely ever manually close a position, and this is usually done by traders being emotionally reactive to price or a fluctuating dollar amount. So normally when I have a position that is starting to move into profit, I will drop 1 to 2 time frames down so I can actually see the market structure being created in the continuation move. And when price is roughly running 1 to 2 risk to reward and I can clearly see new structure points, I will move my stop loss to a stop profit and I'll start trailing my stop under structure points. And then the only way I exit this position is my TP or my stop profit. What you never want to have happen is to see price running 1 to 3.5 or almost at your target when you're in drawdown or when you're starting a fresh new account and you leave your stop loss in its original place or break even and hope that it keeps running to your target. So be okay locking in profit and don't get greedy just trying to get that last bit when you have a huge chunk already there for you, just waiting on the table for you to lock in. Positioning yourself for the next trade is everything, and not being blinded by what you hope will happen. Especially when I have an account in drawdown, I become even more aggressive with my management and my profit taking, and I'm perfectly okay with chunking out a smaller gain to get my account healthy again. And this might be slightly different for you. I've tested this and it works well for my style of trading, but not everyone has the same style. The most important thing is just being prepared ahead of time on how you're going to actively manage positions that are running in profit when you're on a new account, when you're in drawdown, and when you're in profit. And I'm going to leave you with this quote: failing to prepare is preparing to fail. So if you apply all of these things, you will start passing prop firm challenges with ease. But doing this by yourself is easier said than done. So if you want guidance throughout all of this to make sure that you can pass that prop firm test and become a consistently profitable trader, click the first link in the description. Also, if you want to know the exact path on how you can become a consistently profitable trader in just 8 minutes, click here for this video where I reveal to you exactly how to do it.